Welcome to Learning Module number 2. I apologize for the length of the first learning module, but some of them will be longer than others, and you'll be pleasantly surprised that Learning Module number 2 should not be very lengthy. Learning Module number 2 will cover the retained earnings or the statement of retained earnings, and so let's go ahead and get started. So what we're going to do here is let's just start with a quick review that the statement that we worked with here is the income statement. I'm supposed to be able to make the pen a little lighter, so I'll try that next time. So the income statement, which has on it revenues and expenses. Remember that revenues minus expenses equal net income, and net income reflects the profitability of the company. So let's move along to the next slide, and we'll go ahead and here we have the statement of retained earnings. A statement of retained earnings shows the change in the company's retained earnings over a specific period of time. Remember, the income statement is shown a specific period of time, as in for the year ended, the 3 months ended, the month ended. That would reflect a specific period of time. So the income statement is shown like that, and so is the statement of retained earnings. Sometimes the statement of retained earnings is also called the statement of owner's equity. The statement, and I'm abbreviating, of owner's equity. The statement of retained earnings is used when we're talking about a corporation. The statement of owner's equity is when we're talking about partnerships and something we call sole proprietorships, or the mom and pop stores. We prepare this versus this. Today we'll be talking about the statement of retained earnings and how we prepare it for a corporation. The basic structure of the statement of retained earnings is this: beginning retained earnings plus net income or loss. So if we have net income, we would plus it. If we had a loss, we would minus dividends. Dividends are a return of profits to the shareholders of a company. It is a payout where we try to give some of the profits back to the shareholders, equals ending retained earnings. So I like to do it BBRE plus NI minus D equals ERE. Now let's go ahead and go forward one more moment. So this is what a statement of retained earnings would look like. In this case, you see it for the month, so that's for a specific period of time. Here you have the beginning retained earnings as of June 1, plus net income. Where we get the net income from is where? You all know, and by now you should be mouthing the income statement. So one of the things I didn't mention previously is that the 3 statements we're going to learn to prepare have to be prepared in the same order every time. Number 1 is the income statement, number 2 is the statement of retained earnings, and 3 is the balance sheet. So first we prepare the income statement because we need that to get the net income. Second, we would prepare the statement of retained earnings to get that, and then the last statement will be the balance sheet, and you will see where the retained earnings from the statement of retained earnings will flow to the balance sheet. So let's go ahead and work out a couple of examples together. So the first thing I'd like you to do is to turn to page 18. Page 18. Page 18, and we are going to take a look at number 5. Number 5 says, calculate retained earnings. At the beginning of the year, a company has retained earnings of $175,000. During the year, the company generates $110,000 of net income and distributes $10,000 in dividends. Calculate the company's retained earnings at the end of the year. So if we just put down what I had said, BRE, which is the beginning retained earnings, plus net income minus dividends equals ending retained earnings. So if we fill in the blanks here, I believe we could take the $175,000 of retained earnings at the beginning of the year. We're going to plus the net income of $110,000 that they gave us. They said that we had $10,000 of dividends. Therefore, we would be able to come up with the ending retained earnings. So if we take out our trusty calculators, or cell phones as I'm using right now, and we take 175 plus 110, plus 110 minus $10,000, we should get $275,000. And that is the amount of the ending retained earnings. All right, not too complicated. So now let's go ahead and go back to the problem that we were working on page 21. Page 21. Page 21, number 25. So page 21, let me clean that up a little bit, number 25. Remember, we prepared the income statement for this problem, and let's just briefly review what we did here. Here we had to look down this list and take a look at what went on the income statement. So we know that that has revenue. I believe that revenue was $61,000. We then go ahead and go down the list to take a look at the expenses we need to pick up. So we see that there's dividends paid, so we know that there are no dividends on the income statement, so we're not going to pick that up. We have advertising expense, and that was $2,400. We have rent. We have rent of $10,400. We have salaries of $28,000. We have utilities. Again, I don't ever spell that word right. Utilities of $1,800. And if we add those up, we get total expenses. And these total expenses add up to $42,600. Revenue minus expenses gives us net income of $18,400. $18,400. So now what they're going to want is they want us to prepare a statement of retained earnings. So let's go ahead and take a look at that right here next to the other work that we did above. So if we take a look at beginning retained earnings, Did they give us beginning retained earnings anywhere? Yes, they gave us beginning retained earnings on January 1 of $57,000. We then add the net income that came from this income statement. So you have to prepare this first. Then you can prepare the statement of retained earnings. So we're going to add $18,400. Did we pay out any dividends? Remember, dividends are the repayment or the payment of profits out of the company to the shareholders, and we paid out $7,000 in dividends. Is going to end up with ending retained earnings, and I am abbreviating. So if we go back to our calculators and we do the math here, we get 57,000 plus 18,400 minus 7 gives us ending retained earnings of $68,400. Now you think, what do I do with this? What you're going to do with this is we're now going to go over to learning module number 3, and we're going to learn how to do the balance sheet. So this number flows to retained earnings on the balance sheet. I'll look forward to you in learning module number 3.